We were an award-winning Oracle partner. We won an award last year for our enterprise performance management work, and we've won awards for our HR and finance work as well. We were the first modernised Oracle partner. They've changed the partner scheme. It used to be always silver, gold, platinum, diamond, and they've brought in a new modernised scheme where you're accredited for certain areas, and we are on that accreditation. Very passionate about delivering for our clients beyond expectations. We like to build up relationships with clients, build up partnerships, and have long-term relationships. We are totally UK-based. All our staff are UK-based. We don't use any offshore. We don't use any contractors. They're all full-time employed consultants. We've got, I think we've got about 80-something consultants at the moment. So may sound small compared to big SIs, but all of those are Oracle consultants. Big SIs have thousands of people, but spread across lots of different products. So we've got quite a big practice in terms of the UK, and we're growing all the time. You know, we're still recruiting during COVID. All our consultants are certified. We're very experienced. I've myself have been working with Oracle Enterprise Performance Management, and before that Hyperion, for over 19 years now, through the product set as it's evolved from an on-premise product when it was recreated to the cloud. We have an excellent relationship with Oracle. We work very closely with them and make sure our clients get the best service. We also use Oracle Cloud ourselves to run our business, so we use Oracle ERP to do our finance, Oracle Enterprise Performance Management. We've recently just done a re-implementation of that for our finance department to change the way that works. We also use Oracle HR to book all our holidays, look after our people, do all our talent and learning. We recruit the best people in the business, lots of experience, and we also have a graduate scheme. We've just started recruiting for our graduate scheme for this year. Hopefully about 6 more graduates join us, so it's good to bring new blood into the industry, because obviously we need that, because you know, people are getting older, like me, who've worked it for 19 years. We're founded by Chris Mason, our CEO, Richard Eltham, who's also on this call, who is our Chief Technology Officer and Chief Revenue Officer, is also an owner of a business with Chris. Mainly work across the UK and Ireland, though we've done a number of projects abroad in South Africa, Italy, America. You know, we'll work anywhere, but our main focus is the UK and Ireland. A little bit about our mission and values. We hope to become the most respected management consultancy in the Oracle marketplace. We pride ourselves on our professionalism, our expertise, and our trust. You know, we build those close relationships with clients. We like to communicate and grow that relationship. Lots of our clients came on board with small pieces of work, and they've turned into implementations of multiple products across the years. And, you know, we have very long-term relationships with most clients. Our strapline is big enough to deliver, small enough to care. So we're small, we're agile, we're not a huge system integrator. We have the right staff, we need to provide the services, but we just focus on that Oracle arena. We're not doing Microsoft, SAP, and everything as well. So that enables us to really specialize on that and be able to deliver those Oracle projects so successfully. So IFRS 16 for planning and budgeting. So Oracle released this feature, I think it was about 3-4 months ago now. It's an accounting model for leases. So it's bringing on leases onto your balance sheet. So previously, most leases were held off balance sheet. This obviously bringing them on the balance sheet enables your reporting to be more accurate and give a more accurate position of the company and its liabilities. But module is aimed at leasees, not the leaseor. So people who actually rent buildings, rent equipment, cars, that sort of thing. It's a new approach, right of use model. It's the first change to lease accounting, a major change for 25 years. So it's pretty major change, and a lot of organisations are struggling to get on board and make those changes and make sure they provide accurate accounting for those leases. It does move significant liabilities onto the balance sheet, so it is an impact. It is a very big impact for some organisations, especially people who've got lots of leases. So, especially retail, those sort of businesses. But any sort of business that leases a lot of its property being the big one, obviously, because it's the most expensive leases you have. But also manufacturing companies, some of them lease huge amounts of machinery or huge amounts of fleet. Some people, for instance, you saw BTs of the world who have thousands and thousands of vans they use to send their engineers out in. That's a huge lease liability owning all those vans. You have to produce comparative accounts. So it's not just about going forward, you have to go back and produce some comparative accounts so you can provide comparisons between this year and the previous years. Sale and leaseback has been a big thing for quite a few organisations over the last 10, 15 years. It's about removing your non-core assets and focusing your capital on the core of your business. So a lot of people have been getting rid of their offices, selling office space that they previously owned and just leasing it, doing sale and leaseback arrangements. With the changes to IFRS 16, this model doesn't become as attractive in some cases because you're having to state the liability for that lease on your balance sheet. So as part of building the model, if someone was looking at a sale and leaseback arrangement, we could build into the planning model the ability to model the sale and leaseback arrangements and see how that impacts your balance sheet before you make any such decision. So in planning and budgeting, we've got a framework included. The framework is part of the frameworks that are included with enterprise performance management. If you've got planning and budgeting cloud service, which doesn't have the frameworks, we can build something custom for you based on what Oracle have built into the frameworks. Otherwise, it's possible to upgrade and get the frameworks included in your software. If you use the framework provided by Oracle, it's obviously fully supported. Oracle will provide updates as and when any legislation changes. So moving forward, if in 2 years' time there comes out an IFRS 27, which slightly changes how the lease accounting works, Oracle will make that change to that model so you can adapt and adopt the new reporting standard. It's something that's very quick to implement. We're talking weeks at the most. Even if you've got a huge amount of assets, the setup from our side is relatively simple. We can set up, we're talking 2 or 3 weeks at the most to get this set up. Once we've set it up, you can add leases as you take them on. You wouldn't need to come back to us to add new leases to a system. That would be something that the users would be able to do themselves. We just need to do the initial setup to get you working with this. We can build it into your existing Oracle planning and budgeting model. If you want to, we can also look at re-implementing the model with this included, or if you don't own planning and budgeting at the moment, we can look at building your planning and budgeting model with this feature provided. There is also in one of the other Oracle EPM products, Oracle Financial Consolidation and Close, there's also some more stuff in there around reporting of IFRS 16. So if you own that product as well, we can do stuff with you for that. Both of the modules work largely similar. The one in planning and budgeting is more focused around the budgeting and forecasting side of the IFRS 16, but also includes reporting, whereas the solution within Oracle Financial Consolidation Close is a lot more reporting focused. So it depends from which side you want to approach the problem. If you've already got your budgeting done and you just need a reporting solution, perhaps Financial Consolidation Close may be a best fit. We can look at that with you. So now we're going to move on to a demo. I'm going to pass you over to my colleague, Ed Graham, who's going to run you through a demo of the IFRS 16 module in planning and budgeting. So I'll just make him presenter. Over to you, Ed.
Unmuted.
Ed, we can't hear you.
Hi everyone. My name is Ed Graham. I am the Senior EPM Consultant at Namos Solutions, and I will be taking you through our demo of IFRS 16 functionality, which came in recently into the Oracle planning and budgeting process within the Capital Framework. So the new Oracle look and feel is fully available, and this gives us card-based navigation, which is flexible and can be configured to your needs. I have created what we call a card for IFRS 16 to keep all the IFRS 16 stuff together, but this functionality can be put on any of your navigation flows or put onto your task list. So firstly, I'm going to show how to configure the system, which is like a one-click configuration. Then I'm going to show you the dashboard that comes out of the box and is very informative, but of course can be customized. Next, I'm going to show a leased asset in the system, what it looks like. Then I'll show you the company assumptions that you can set up for the lease asset functionality, and these assumptions drive the calculations. Next, we're going to create a new lease asset live. After we've done that, I'll show you the unique functionality that Oracle provides to compare lease assets and assets that you buy. And finally, we'll have a quick look at Smart View, which is the detail. Any questions? We'll open the questions at the end of the session. Okay, so how do we configure IFRS 16 lease assets? It's very simple. We go to the configuration screen for a Capital module. And then we enable a feature. So all we need to do is click this IFRS 16 standard tick box, and then click over here on the enable functionality. And that will enable the functionality and all the calculations required. Okay, so let's go in and have a look at the functionality. So if we look at within the IFRS 16, you can have new assets or new lease assets, which they call investments, or you can load in your existing assets from your current accounting system. If we look at the new asset functionality, this is the dashboard that comes out of the box. It shows you both new capital expenditure and also the new leases. Within the income statement impact, it shows you the expenses to the P&L, and you can drill down on this to get depreciation, interest, and also fixed asset related expenses, insurance, maintenance, repairs. Over on this tab, we have cash flow. This shows the cash flow for the lease payments and also the cash flow for any assets that we buy, which are kind of one-off cash flow. Over on this tab at the bottom, you can see the analysis of new owned versus lease assets, and we will cover that in more detail. And then finally, there's a tab on capital expenditures, so for owned assets. Let's go and have a look at a lease asset. So a lease asset in the system is created. So previously, I've created a mechanical ventilator, which was needed a few months ago for all our hospitals. And within the asset detail, you need to enter a description, a lease date, a lease term, a useful life, a payment frequency, payment timing, who owns the lease, the lessor or the lessee, the interest rate for calculating the present value of the lease, and an index rate if you want to index the lease to inflation, or the payments are indexed to inflation. And the system will go away and calculate the present value of the lease, which is shown here. And then we also have your lease payment, and then your insurance, maintenance, repairs, and fuel and gas expense or running expense of the lease asset. And these are all monthly amounts. And the system calculates the total expense for capital and allows you to put in a justification for the asset. Down here, we've got a nice graph showing the profit and loss impact of the lease. And if we highlight that, we can drill down that to show the cost of the lease, or the expense of the lease is effectively depreciation, which is on a straight line basis, and interest, which is calculated on the lease liability. Also, the system can automatically calculate some related expenses, so you can plan these by year, and these are the ones I mentioned: repairs, maintenance, insurance, and fuel and gas expense. Okay, so how are these calculations driven? These calculations are driven from the assumptions page. Before I go to that, I just wanted to show the cash flow impact. So the cash flow impact of this lease is just the lease payments, and these lease payments are increasing because we put a 5% inflation index into the lease payment. Okay, so let's go to the assumptions. So the assumptions for the lease are held. You can either have your assumptions at the company assumptions level, which does it for all your companies, or you can put them at the individual entity level. I put them at the company assumption level, and as you see here, the main assumptions are based on asset class. So you can either use separate asset classes for your lease assets, or you can use the same asset class that you use for your bought assets. And the new lease assets will take in the useful life that's recorded here. Also, the depreciation method, which is straight line for as per IFRS 16. When you want the lease depreciation to start, beginning of period, actual date, or mid-period. The value that you want to have your low value for lease term, so anything over a lease term of 12 months with this setup, we'll put the lease on the balance sheet. Anything under 12 months and the lease will be expensed monthly. And then the low value of the lease amount. So this low value of the lease amount is a monthly amount. I think the value recommended is something like 5,000 per year, which works out to be £400 per month. So you can override these values by putting something into the into your individual companies, but for convenience, it's probably easier just to put them in at company assumption level. Okay, so let's go and create a lease. If we create a lease under the same machinery and equipment asset class, all we need to do is go to actions, add new lease asset. So if we create something like a ICU, which may be needed because the ICUs may be worn out after a lot of use recently, we need to enter a description. We need to say each asset justification is say that's worn out ICU. Lease dates, so we can choose a date, lease value in years, lease payments. Payment frequency can be monthly, annual, semi-yearly. Payment timing, beginning of period or end of the period, implicit interest rate at 10%. We're not going to have an index rate, but you can put that. Ownership after lease term, leasee, and then you can put stuff like asset value at start of lease, asset age, purchase price, salvage value. So this is the asset name in the planning system. So if we hit launch, that will create a lease asset. And you see, it takes you to this screen where you can change the individual terms or whatever you want to change, which is pulled from the defaults. We can also add in, on this screen, we can add in some insurance, maintenance, or repairs. I don't know what the running expenses of an ICU are, but let's just say that 10 grand. Add that in, and then what we need to do is save that. And then we can calculate our lease. So just by going actions, calculate lease, that will calculate the lease for us. And if we have a look down here, we can see that our lease is now impacted in the profit and loss and the cost impact graphs below. And so in the screen, we can create different leases for different asset classes. And if we have a look at some of the other asset classes, you can see I previously created a lease for a Tesla M3 car, and I've also created a lease, a bought asset. So we can see this is where you add new assets that you buy, and you can see I've also added a Tesla M3 here. So I've also bought an asset. So the idea here is that I want to now compare between buying a Tesla and leasing a Tesla, and just have a look to see what the difference is. So if I go into the screen that shows you the buy and lease analysis, this screen allows me to directly compare the Tesla M3 that I plan to buy, and the Tesla M3 that I plan to lease. So if we look here, you can see an easy comparison between the two assets. And remember that IFRS 16 is designed to bring your lease assets on the balance sheet, and so they have comparable treatment, accounting treatment to your bought assets. And we'll see that as we go through this analysis. The second screen here shows you the actual asset analysis. And if you see here, the cash outflow from buying the asset is 40,000. You've got insurance, maintenance, and repairs, bringing the total operating expenses over the lifetime of 45,500. On the other side, on the lease asset, you see that you've got lease payments of 44,380, and this is expensed over the lease term with interest at 3,942. So this interest is calculated on the present value of the lease liability, and the depreciation a straight line of 40,000, giving you total operating expenses on the lease asset of 44,000. So very comparable. If we look back here, we see that Tesla was offering a 4.9% implicit rate and a lease payment of £573, which actually is very comparable to the price they were offering, that you could buy the assets plus also pay the insurance, maintenance, and repairs, which hopefully under the lease, the leaseor would cover for you. So if we have a look at the expenses that are actually going to be charged on both options, we can go to the expense analysis dashboard, and if we see straight away that the expense comparison is very similar between owning and buying the lease. I mean, leasing or owning the lease. So on this side, we've got depreciation, insurance, maintenance, repairs, and fuel and gas expense. So we've got, with a Tesla, hopefully we're going to plug it in for free or at home, and it's only a small cost of £500 per year. And over on this side, on the lease side, you see you've got the same depreciation expense, but you've also got an interest expense, now charging interest on the lease liability, and this will decrease as the lease liability goes down. And you've also got the same fuel and gas expense of charging expense, which is minimal on a Tesla, hopefully. So this shows you that planning for lease assets in Oracle gives you exactly what you want, which is under IFRS 16, which shows comparable analysis, either a buy option or a lease option. If we look at the cash flow comparison, this is where we expect a difference in change. So under the buy option, obviously we are buying the asset up front, and we see the cash is being spent up front. And under the lease option, we see that the lease payments are spread across the years, with the down payment of 10 grand up front. Okay, so if we just now go and have a look into Smart View, we can see these access to the detailed numbers. So this is my Smart View connected to the Oracle demo system. you can see these numbers are at the detail level. So if we want to go and have a look at the lease asset that we just created, we can see here the figures for the lease asset. So in the first month, which I've highlighted in June, you can see that the lease liability and the lease asset, and you can also see the accumulated depreciation of 1 month depreciation. You can see the current portion of the lease liability and the long-term portion. You can see the depreciation and interest, and you can see the lease payments. We can also easily have a look at go and have a look at our Tesla. So this is under a different asset class. And it's also under a different different asset detail. So let's have a look for the there we go. So our Tesla. So again, we're seeing the accumulated depreciation, the depreciation interest, and the lease payments. We're also seeing the detail by month, and then we can see the detail at the kind of end of each year. We can also the good thing about Smart View is you can drill down and drill up. So this is a live Smart View. You see the yellow tabs are entry tabs. Obviously, we don't want to enter that because we want to let the system calculate it. But just to prove this is a live system, we can see we can slice and dice the data however we want. Okay, so today we have covered lease accounting IFRS 16. I hope this was useful. It shows that you can now plan assets using the IFRS 16 functionality easily, and it shows that Oracle can handle the new requirements with its new calculations, and you can plan your lease assets and your bought assets separately, and you can compare them over the years, and you can show that the treatment of your lease assets and your bought assets are the same with your expenses. Okay, JT, do you want to open up the session for questions?
Great, thank you, Ed. Could you just give me presenter back, please? Thank you. Thank you, everyone, for attending today. Has anyone got any questions you'd like to ask? If you want to ask a question, just unmute yourself and you'll be able to ask a question or put it into the chat window, please. Anyone got any questions about planning, budgeting, IFRS 16, or anything they'd like to ask? Like I said, you can unmute yourself or place it in the chat window. Just give people a couple of minutes to ask some questions. Okay, well, if there's no questions, thank you everyone for attending today. If you'd like any further information, please contact myself or Matthew Hallett, our sales director, and we'll be happy to help. We'll be sharing a copy of this webinar on our website, so you'll be able to view it back if you need to, and all our contact details are on the website. Thank you everyone for attending today, and if we can be of any help in the future, please get in contact. Thank you.
Thanks, Chaps.